going to go over the markets this week. The markets have been dominated by the Fed rate cuts. I'm going to go over how this has been affected, what it means for the markets, and how I interpret it. First of all, the Fed cut rates as expected. This wasn't a surprise. It cut rates 0.25%. What was a surprise, or what came to a surprise to markets, was the over-hawkishly tone of Jay Powell. Now, this led to the US markets falling by 3% and the Dow Jones having the worst day since 2001. So how do I interpret this, and what do I personally think about this? I think it just shows the position the markets are in right now, and the position where a lot of both retail traders and active traders are in the US market, and that is long. They've had a good year. They're seeing the gains up 20%. They maybe see this as a sign to take some of the gains and just relax till Christmas on this narrative. What I see is that nothing too much has fundamentally changed. They're still looking at 2 rate cuts this year. They may still have 3 next year in 2025. Jay Powell didn't put it off the table. It was data dependent. And that it may be a good time to relook at your portfolio and rebalance potentially more into the US, because in 2025, the US has the strongest outlook. It's a lot better than Europe. It's a lot better than China. Everyone is bullish the dollar, the bullish US markets in 2025. Maybe this is the opening that you may want to look for in 2025 and beyond.